Welcome to the Lend Academy podcast, episode number 146. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lend It Fintech. This episode of the Lend Academy podcast is sponsored by Northridge Software, the platform behind some of the largest and most innovative lending companies in fintech. If you've gone to Lend It, chances are you've seen some of their customers. They chose Northridge Software because it allowed them to push to market faster, provided the flexibility that other platforms don't, and enabled them to go from startup to IPO. Learn more at northridge.com. Today on the show, we are talking small business financing. I'm delighted to welcome Gina Taylor. She is the General Manager of Global Commercial Financing at American Express. Now, everyone knows American Express. Their credit cards are ubiquitous. But what people may not know is that they are building a complete suite of financing products for small business owners that go way beyond just the credit card. And so I wanted to get Gina on the show to talk about the different options, which we go into in some depth. We talk about how they approach underwriting, how they market these products, and we delve into each of the different kinds of products that American Express offers today. We also talk about the competitive landscape, and we talk about the state of the small business owner. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Gina.
Thank you. Thrilled to be here.
Great. So I'd like to get these things started by giving the listeners a little bit of background about yourself, what you've done in your career, both before you got to American Express and at American Express.
Great. I've actually been with American Express for about 20 years. So prior to that, I did spend a year working at Signet Bank. Signet Bank had spun off Cap One many years ago, but most of my career here really has been with American Express. And with American Express, I've focused on a few different areas over my time. I have led customer acquisition. I've worked in risk management for half of my career, and I have been in product management and in strategy roles. So those are the areas. And from a lending perspective, I've had a chance to work on lending and lead lending functions, whether that was in acquisition or in risk management or now in product management.
Okay, so then why don't we just go through and tell us a little bit about your role today at American Express?
Sure. So I am leading the Global Commercial Financing Division within Global Commercial Services at American Express. Our objective and focus is really on serving small and mid-sized customers working capital and financing needs. So we aspire to be a leading provider in working capital for the SME segment in the US and actually, frankly, globally. And so when I think about it, we currently provide a suite of solutions that start meeting those needs, and they're in three categories. We have under me the card lending, so traditional credit card. We have term loans, and we'll talk about that, I'm sure, shortly with the business loans and merchant financing product. And we also have invoice financing. And we launched in 2016 working capital terms. And so we're really trying to be here to support small businesses that have a desire to manage their cash flow, desire to grow, or even consolidate debt with this broad set of financing solutions.
Okay, yeah, so I do want to get into those different options here in a little bit, but before I do that, because American Express has obviously made their name through the credit card business. How long have these other types of offerings been available?
Yeah, so that's a great question. So merchant financing, we launched that in 2011. Working capital terms, we launched in 2016, and business loans, we launched last year in 2017. So we have a long heritage, though, serving small businesses for the last 25 years, but that's mostly been, as you noted, on the card side.
Right. Okay. So, and most of us are all pretty familiar with the different card offerings you guys have. We're not going to focus on that today. I firstly want to delve into the business loans, the business loan product that you have, because I mean, some people probably don't even know this is available. But why don't you tell us a little bit about the loan terms for the product, the interest rate, the loan size, that sort of thing?
Sure. So, we had a desire to launch a product that we could offer to our business card members that was a loan solution that could be fast, easy, and competitively priced. So we were really trying to solve that need for access to capital with small dollar loans, which we believe that there wasn't anyone that was exactly positioned to compete directly against us in that offering. So for the larger banks, it's a lot of work to focus on small dollar loans, and the process is typically a longer process to apply. And then for the alternative or online lenders, they do offer small dollar loans to businesses, but oftentimes at a higher rate than what we might want to offer. So what we were trying to do is create a solution. Right now, it's a pre-approved offering to our eligible business card members, and they can apply for loans that range from $3,500 up to $50,000. And with that, we have competitive rates as low as 6.98% APR, and there's a range up to about 19.97% APR. And so customers can also, this is online, it's a digital offering. They can go, if they're eligible to apply, to select the duration of the loan. And so they have an offering of 1, 2, or 3 years. And so that's the current solution. And it's really meant to serve the need of a small business that has that need to access capital, either for debt consolidation or for a small purchase for a strategic investment, maybe to invest in growing or renovating their kitchen, something along those lines. So that's really the objective there.
Right. That makes sense. So I'm thinking about the competitive landscape here a little bit, and you certainly On Deck and Cabbage, who I'm sure you know very well, Square. There's these are companies that really have, well, particularly in the case of On Deck and Cabbage, for many years been offering these online loans for small businesses, as you say, maybe at higher rates than what you guys charge. But I'm curious to know, like, what have you learned from studying the leaders in the online lending space?
Yeah, so we certainly have observed them over the years, and we do appreciate the seamless application process. We appreciate the attempt to bring in many sources of data to integrate that into the decision making. And, we appreciate the desire to serve a core need of a small business. And so, with that, we've tried positioned as American Express to offer a competitive solution to our small business card members. And so we've tried to use our internal data as well as any external data to look at pre-approving and making it a very simple process for our business card members to apply, very much like what others may admire from some of the online lenders. So that's really what we've looked at.
Okay, so I presume then you have a quick decision-making process, because that's what these other companies have sort of built their businesses on, is that you don't have to wait, you don't have to put all your information in and then wait for a week. I mean, a lot of these companies now offer instant sort of credit decisions. Is that the case at American Express? And if so, then like how are you able to do that, and what's sort of the underwriting and the technology that you're using to achieve that?
Yes, it's a great question. We are able to provide the decision if you're eligible to apply within 60 seconds. And we analyze, as I mentioned, all of the internal data, every transaction that you've had with us. We use the information about your behaviors, your spend, as well as any bureau behavior that we can pull in to be able to really think through what the optimal loan amount is. We want to make sure that we are offering responsible lending to our customers. And so we're really trying to match our understanding of their need with an offering that is relevant for them, using all of our real-time underwriting data and models.
Mm-hmm. Okay. So I know you've got other things here. I want to get to some of the other offerings here. You've got working capital terms, I think it's called, and that's, I believe, your invoice financing offering. Can you tell us a little bit about that and why you decided to launch that particular segment?
Sure. So we did launch working capital terms, which is payables or invoice financing for our business card members. We launched that in 2016, and we really thought through what a core need was as we were trying to understand how we can support the small businesses we serve and how they use, frankly, our card products today. And we understood that sometimes there was a need to extend payment on some of our core card products. And so we're looking and really spending time understanding the insight. And it was really around the inflow and outflow of cash and the cash conversion cycle. And we identified that for many industries, we could offer a solution where we can help those businesses, our card members, by paying the vendor immediately and then withdrawing from the bank account of our card member 30, 60, or 90 days later. So really providing that financing. But it's a combination. It's both payments and financing. So we enable the opportunity for this business card member to pay even non-accepting American Express merchants and then to finance that invoice.
Interesting. And so this, like, what is, you said 30, 60, 90 days. Can you give us a sense of the rates or what it would cost the small business owner?
Yeah, so there's a range of rates right now. We do lead with many of our offerings at 0.5% for 30 days, 1% for 60 days, and 1.5% for 90 days. But again, we do look at risk-based pricing, so risk-adjusted pricing, depending on the particular business card member. But that's the typical range. So you can think of, somewhere in the 6 to 12% of, effective APR range for many of the card members that we're offering, depending on the risk-adjusted pricing.
Right.
So that's what we offer. And the capacity, so the loan amounts range anywhere. You can pay a vendor $1,000, or some are eligible up to capacity as high as we promote up to $750,000 in capacity. So that enables, and what we really believe, why we think we're uniquely positioned to offer the solution is, we're using our real-time information like we do on our charge and credit cards today about that particular business card member and how they're spending with us. And so we're able to underwrite that decision transaction by transaction, which is really exciting. And so the capacity can be as high as $750,000.
Okay, so then let's move on to the merchant financing. And obviously, the American Express card is offered by many companies, including my company, Lendit. We obviously have a lot of people paying with that. And so the merchant financing, I presume, is available for those businesses that are offering American Express cards. And can you just tell us a little bit about how that works?
Yeah, sure. So the last couple of products, business loans and working capital terms, were really solutions that we're offering to our business card members. Merchant financing is a solution we offer to American Express accepting merchants. So they welcome acceptance of American Express. And so since 2011, we've offered this competitive product. Right now, the terms that we lead with are 6 month, 12-month, or 2-year term products. And it's really designed to fund large business purchases, expenses, maybe to help with debt consolidation. Maybe there's a business renovation that you're thinking about or a big equipment purchase, because the loan amounts range in this particular product from as low as $5,000 up to $2 million. And it is a flat fixed fee. And we do offer, there's a range of rates, but we do offer competitive pricing as low as about 3.5% fixed fee, which is very competitive. So if you think about a 6% fee might be a typical fee that a business merchant would be eligible for. On a $100,000 loan, they're paying $6,000. They have access to those funds immediately, and then they are able to pay that off over time as they continue to generate the charge volume, their card receivables. We're able to deduct that on a daily basis. So it's spread out over the duration of the loan, and they get the access to the funds immediately.
Mm-hmm. So I just want to be clear, are you deducting it from the small business owner's bank account, or are you deducting it from the merchant revenue that the customer, the company is putting on? They're getting American Express revenue. Which one is it?
So it's both. It depends on so it depends on the particular construct. If they happen to be an American Express proprietary merchant, we present an option to them that we can actually deduct it right from their American Express charge receivable. So that's an option. We also do have the daily debit from an ACH, from a bank account. So yes, we have a variety of options. What's exciting about this solution is we have the ability to offer an instant answer in many cases for up to maybe 150,000 loan amount or 250,000 loan amount instantly. But there's also the opportunity to provide additional data and have a dialogue with our customer service representatives and be able to really talk about what your financing need is and be able to provide higher loan amounts for those particular customers. Mm-hmm. So it is customized, and that's where I say the actual solution and construct can adjust based on the merchant's need.
Right. And so then you've got multiple offerings here, and they're all obviously all a little bit different. Is the target customer? I mean, you mentioned the cardholders, the merchants. I get it, but as far as the typical type customer, how does it break down between the three offerings? Are there groups that really go for more of the merchant financing versus the business loans, or how does it break down?
So that's a great question. So I do like to think about it again back at the beginning to a suite of financing solutions. We've got the solutions that enable you to buy and pay over time, which are our card solutions. We have financing solutions that are term loan, and they can really sit easily side by side with the working capital terms product, which is a payables financing solution or invoice financing solution. So we really try to think about what that business customer's need is. So speaking about the set of financing solutions, the three that we've just talked about, we really try to reflect on that particular business's need. If they have a growing need, short-term need, ultra short-term, they have many vendors they're looking to pay, we are very excited to offer working capital terms. If it is a merchant, we have a conversation around merchant financing. What can we do to help you grow your business to fund your growth or help you consolidate debt? If it's really about fast and easy and simple, lower loan amounts, so lower dollar loans, then we direct customers to the business loans offering. So we really try to think about what their need is and the problem that they're trying to solve.
Mm-hmm. Right, and obviously there's lots of choices these days, including borrowing from a bank, and we've obviously had. It sounds like from what you're doing, you even though you are somewhat of a traditional financial institution, you're trying to do things a little differently than the traditional banks. So, I guess why would a small business owner choose to borrow from American Express compared to some of the other options like a bank?
Yeah, so I hope that we have many more of the customer that I'm going to describe to you right now. We've just met with him somewhat recently. We're trying to really look at our offerings recently and see what customers are taking the solutions. And we found a San Francisco market owner, Korean food market owner, and we were excited to find that, he's been a business card member. He has both our charge card and our credit card for several years. And in the fall, we really started talking about our financing suite, talking about it on our website a little bit more, and then also in our direct marketing and having the positioning available and access to these products. And so, what we heard from him is that, he was growing his business and he was excited. He's a merchant. He's also one of our merchants as well as a supermarket owner. And he was growing his business, and he was trying to really reflect on different solutions that would help him meet his needs to pay his vendors, to be able to pay maybe non-American Express accepting vendors, to be able to extend payment and finance those payments, and then also to invest in some renovations and growth for his business. And so he found all three products to be very valuable. Merchant financing to help him expand his business and grow, business loans to invest in a couple of particular things in his store, and then for working capital terms, he actually uses it to pay on a somewhat regular basis a non-accepting merchant, a specialty food store. So that was interesting for us as well to understand how he's using working capital terms. And he does want to finance that as well. So what I would say is we're really excited about the solution set. And why do we add value? We're trying to make it simple. We have been serving small businesses for 25 years. We care deeply about them. We spend time really thinking about different initiatives to support the growth of small businesses. And so we really have thought about coming out of the last recession that the need for access to capital was compressed a bit for small businesses. And that's where the insight came out, especially for merchant storefront owners, to create merchant financing. And we've tried to build upon that with our expanded offers with working capital terms and business loans. So we're really here to serve the small business segment in a way that we hope is meaningful for them and by a trusted provider.
Okay, so then obviously your customer base is very large. We have multiple American Express cards here at Lendit, so we accept American Express. So we certainly are, as many other small businesses would as well, be part of your customer database. But are you really focused on your existing customers and trying to sell them these products, or are you I don't know what the segment of the business population that doesn't have any connection with American Express, but I imagine it's significant. But are you really just focused on your own existing customers versus sort of expanding the pie and offering it to new people?
Yeah, so thank you. That's a great question. At this point in time, we think about this as value-added solutions for our business card members and merchants. So we are offering these solutions to eligible American Express customers. So that's our focus at this point. It doesn't mean that down the line we don't expand to prospective clients. We just have a very large base of existing customers that we want to first serve and get it right for them. So think about the needs that they have and tailor solutions that are most relevant, get their feedback, and continue to iterate and build from there. As I mentioned, we launched in 2011 with our first product coming out of the recession, and then we wanted to watch that and grow it and think about the tweaks we needed to make. And then from there, more recently, we've been adding to the suite. Mm-hmm. So our job right now and our focus in the immediate term is serving our existing customers. Right.
Okay, that makes sense. So then how do you decide, how are you marketing to these customers? Are you focusing on, are you looking at the different, obviously you've got masses of data on everybody, and are you sort of proactively looking at certain companies that would be ripe for your product and proactively doing it, or how are you marketing it?
Yeah, so it's a great question. So we are really thinking across all of our direct marketing channels. Our objective is to provide the solutions in all of our proprietary channels so that when a small business or a mid-sized business has a need for financing, it's easily accessible. They see it present. In addition to that, we also have a large field and account development organization. And so beginning last year, we really began to focus on the broader set of solutions, financing solutions, to make that available to our client-managed customers. So as any of our client managers are having a conversation around another product, they're also asking, do you have a working capital need? Do you have a financing need? So that's the second area that we've been focusing on. I think the third area I would say is we also want to be where customers are interacting. So we want to be relevant and we want to be present for our customers and maybe ultimately for future partners' customers. And so we do have a pretty robust partnership strategy that we do spend time trying to cultivate relationships. It might be with third-party processors for merchant financing. It may be through the marketplace lenders because we know small businesses, when they have a need, go to a marketplace to seek out the various options. It may be through a marketplace or an accounting software provider. So that is important for us to really forge the right relationships so that we're there where customers are interacting. And then ultimately that may lead to an opportunity for us to offer the solution set to partners' customers as well, as I mentioned.
Mm-hmm. Okay. So you've got obviously a pretty good view into the state of small business today, and you can see the trends in your own data. So how is the small business owner doing? We hear that everyone seems to be pretty optimistic and things are going well, but I'd love to hear from your perspective, what is the state of the small business owner today?
Yeah, so I would say that we do have a lot of data on that. We spend a lot of time understanding internally what is happening with small businesses. We support them, extensively. And so in our 2017 SME Pulse survey, we did find that SMEs are more confident than last year about the overall economic outlook. And so many were expecting strong revenue growth. There was also a lot of confidence in the global economy and then confidence in the domestic economies as well. So we looked at this across many countries. We also stay close to our customers by speaking with them regularly and listening to their needs. And we hear a lot of optimism. And so that's the state of where we are today. Having said that as well, I am in a lending function. I'm leading a lending function. So we're always thinking about recession planning as well. So while we are focused on growth and transformation and trying to think about the next modification to the product set, the next right increase in loan amount maybe, or in competitive pricing to make sure that we're staying relevant in the market, we're also spending quite a bit of time thinking through what are the commercial capabilities we need to be ready for the next economic downturn, because now we do have this commercial financing suite or business financing suite that we did not have in the last recession. So I would say there's a lot of optimism. We feel optimistic. We are expanding the product set and we're expanding responsibly who we make eligible within our franchise. But at the same time, we're also planning for the downside. Right.
Okay. So that makes sense. And so we're almost out of time, but I know you gave us one story earlier. I mean, I'm a lifelong entrepreneur. My father was a lifelong entrepreneur. I love small business, and I'd like to know if just what could you share as we close here, just some of the small business success stories that you have encountered in recent times.
That's great. Well, it's funny that you ask, because we try to bring in and invite in our customers regularly to speak to the larger organization here. We truly do try to have a customer first mindset. And we had I was sitting at the lunch before the panel with many of our customers that are using actively working capital terms or merchant financing or business loans, or even our other card lending products. And I was very touched by an individual that focuses on expanding his drapery business. And he has used working capital terms to really negotiate vendor terms and really think, as he's looking at the next big purchase, how he can incorporate working capital terms into his decision process and his growth strategy as he's building out his business. It's growing. He needs to buy the raw materials. He needs to then construct it, and then he has to sell it to his customers. And working capital terms has become a bit embedded in his business operations. And I love hearing those stories. We had also a merchant financing customer, well, we had a couple of them, that have used the merchant financing product multiple times. Our renewal rate is high. The merchants love it. We have a great NPS. And I was excited to hear from both of them that they were repeat users. And their desire is really they think about how they incorporate that as they're expanding maybe a product line within their business, or they're doing some renovations, how they're using the merchant financing product. So funny that you bring it up. We just had 6 of them in last week here in our office. So those are some examples of exciting and inspiring stories for me.
Okay, well, we'll leave it there on that note. I really appreciate you coming on the show today, Gina.
Thank you so much.
Okay, see ya. The real winner here is the small business owner. I'm just impressed by how much, access to capital has changed over the last 5 years, certainly over the last 10 since the financial crisis. There are so many more options today. You've got the Cabbages and Ondex of the world. You've got, the funding circles of the world. And you've got, obviously you've got your bank that is not sort of remaining in a vacuum. Banks realize they have to innovate as well. And you've got companies like American Express that have recognized an opportunity and have pursued it pretty aggressively. This suite of products is a pretty extensive suite that cover the needs of the vast majority of small business owners, particularly when you include the credit card offerings. So it's a win for small business owners for sure. I think, this is a different time, and I think that we're moving towards a time where, every small business owner who deserves credit will be able to get credit. And we're not there yet, but what American Express and others are doing are moving us closer to that reality. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. This episode of the Lend Academy podcast was sponsored by Nortridge Software, the platform behind some of the largest and most innovative lending companies in fintech. If you've gone to lend it, chances are you've seen some of their customers. They chose Nortridge Software because it allowed them to push to market faster, provided the flexibility that other platforms don't, and enabled them to go from startup to IPO. Learn more at nortridge.com.